Hey guys, welcome back. In today's video, we are talking about the AMC profit, the 300% increase, the push to 39, and many more in this video. Firstly, we're taking a look at this. Another reminder for those still betting against AMC is that recently we have seen analysts upgrade their target on AMC. Now, throughout the last few months, we've already seen people raising their price targets on AMC, people upgrading their ratings to buys on AMC. And recently, we've seen this from Zach as well. And what we are seeing is right now, they've raised their full year EPS estimates, and we have one of the strongest domestic box office in years. We see how well AMC is doing it within the industry. That's already showing great growth. And that's why we're seeing more and more upgrades on AMC. Now, AMC's next earnings approximately August 11th, and they should announce considerable profit. Market cap currently around 1.7 billion, far too low, and shorts anchored heavily to very low single-digit average. So, firstly, we have talked about this. The next earnings is very important for us. Now, the reason why it's important isn't just because the fact that I think it's going to be the earnings that's really going to accelerate AMC, but it's the understanding of how well we're doing and how well we could be doing. Now, when AMC, we've expected with how efficient we are, with how the box office is doing, with the records that we're breaking, the revenue that we're making, it wouldn't surprise us to see how well we do during earnings. But the fact that if we are able to see the profit margin increase, the fact that we are able to see operational costs going down, the fact that we are able to see profit going up, when we see all of those things and we see how big Q3 and Q4 is going to get, that becomes even more important. Bear in mind, AMC is becoming more and more efficient month by month, quarter by quarter. And so it's why I talked about how the next earnings, not only is it going to attract a lot more institutions and capital into AMC, but it also gives us a very good understanding of where we are going into the future. Now, another big thing about this is that, of course, shorts have been shorting AMC for a very long time. Just like how apes have been average cost down on AMC shares as we see AMC, shorts are doing the same thing as well. And so right now, it's why we talked about people like John Hampton are extremely scared of AMC because they've doubled down on AMC when it was dropping towards $1. They doubled down on AMC when AMC dropped below $1. But we obviously see where AMC is now. So we understand that these short positions are obviously not doing well and they're heavily in the reds. And so this is going to be a massive thing. And for those of you who said movies still haven't recovered since COVID, remember Adam Aaron recently talked about the domestic box office. He talked about how important this is for AMC. And he goes on to talk about how this is the 5th biggest of the 200 quarters of the past 50 years. So to really understand what's going on right now, to really see how important this is and why we said that this is really going to shape AMC going to the future is because Adam Aaron is already giving us hints on just how big this is. And so with everything that's going on right now, with how well we're expecting AMC to do, of course, you're going to see the FUD. So right now, the key FUD talking point is AMC is through out of court restructuring. Nothing more will happen. If you guys take a look at this article, run for the exits, AMC stock is not your ticket to wealth. So despite the fact that AMC since 193 that we saw down here has gone up to a point of more than 300% and still right now above 100%, they're still telling you to leave AMC. They're still telling you there is no growth potential in AMC. But clearly we know that that is not the case. Again, one of the biggest examples we always talk about is don't just look at the media narrative on AMC, but look at what's actually happening behind the scenes. One of the biggest things you can see in terms of contrast is seeing media articles telling you to sell your AMC, and seeing media articles saying no one's buying AMC, but when you look at the filings, institutions are buying more and more. And you can take a look at this example right here. They only care that retail invests, but they say nothing about the institutions continue to scoop up shares. So when you take a look at the institutional ownership, what you will see is that they are constantly buying shares, and you can see that in terms of their accumulation, it's increasing quarter by quarter. So they don't talk about how institutions have just continuously bought AMC. They only talk about retail should be selling, retail should not be buying, etc., etc. But that clearly doesn't make sense because if AMC truly is a stock that has no growth potential, that is going to bankruptcy, then these so-called smart money, these institutions with some of the most advanced information, why will they still be buying in? Why will they still be continuously trying to buy and accumulate as much AMC shares as possible? Not to mention, a lot of these firms have their price at a higher average price than the current market price, yet they still decide not to sell and actually buy more. So if you think that AMC is going to bankruptcy, if these institutions think that the AMC is going to go bankruptcy, they would have sold their shares already. The fact that they're doing the complete opposite, it gives you a lot of what you need to understand for AMC. And recently, you can see how they're changing the narrative on AMC, but they still want to push a negative narrative despite how well we're doing. You can see right now is Gasparino admitting that price is moving up because of talk of a better box office, but then proceeds to nitpick at the reverse split. The target audience of this podcast is clearly sophisticated investors and not retail. It's psychological operations, highlighting small deficiencies of AMC whilst brushing over the serious growth of AMC since the pandemic. And we've always talked about this, even though we are seeing right now how some articles have changed their narrative from complete negative to somewhat positive on AMC, there is always slight hints of trying to push a negative agenda. What I mean by this is that there will be articles that titled AMC is doing well. And then when you go into the article, they start trying to change the narrative where AMC is doing well only for now, or AMC is doing well, but something's about to happen, right? Along those lines of examples. And this is what we talked about with how it's because they can't actually lie straight up because AMC is just doing well. We are seeing AMC improving. We are seeing the box office improving. So they know that they can't just make straight out lies saying that the box office is going down, that AMC is not making money. But what they can do is obviously try and pinpoint these very, very small points, and they will try and enlarge it as if it's going to be the factor of AMC going bankrupt. And again, you'll see this going on into the future as well. If we see AMC somehow decrease their revenue by even just 1 million, you're going to see how they're going to try and highlight that point as if that 1 million in difference is going to be the one that's going to be allowing AMC to go bankrupt. We've seen this plenty of times before, but the fact that they're talking well about AMC is just straight up proof that AMC is very, very good. Right now, we are seeing that in the same sector where there's different narratives. We are seeing that AMC clearly doesn't have a price tag because of how well we're doing. When you take a look at AMC articles and then you take a look at Cinemark articles, you can see constant increase. You can see Cinemark price target raised to $30 per shares from 23. Whereas for AMC, just like what we talked about earlier, they're trying to tell you to run away from AMC despite how well the industry is doing, despite how well AMC is doing within the industry. And again, I can talk a lot more about how this is just what we have to face with, but you already know by now. And the biggest thing is that institutions keep buying. Selling pressure is non-existent and price doesn't move. Markup in late July or August, it's that obvious. We still are seeing dark pools, we're still seeing the suppression, but at the end of the day, right now, the biggest thing is that there is no sell pressure. That shows a lot already, that the fact that no one is actually selling. And then institutions are trying to buy, but as quietly as possible. They're not just buying 1 or 2 shares, remember, they're trying to scoop up the entire float. And that really goes on to talk about just how sorted AMC is. Firstly, if we take a look at the short volume as well, up 156% in one day. Now, this is what we said with how the reason why AMC going down isn't because there is sell pressure, isn't because suddenly retail decided to sell AMC after staying with AMC, right? When you take a look at one of the most simplest example, and this is the biggest key thing that we've always highlighted, is why would someone buy AMC for 5 years? And suddenly, as we see the box office is doing well, as we see AMC is doing well, we then suddenly go, yeah, let's sell our AMC. Clearly, that doesn't make sense. And that's because no one is doing that. And the reason why we're seeing AMC having red days is because of the short interest that's going insane. Another big thing is, of course, the off exchange. You can see 80% here. And just like we've said, even on days when AMC had 40% of the exchange, we saw AMC go up 14%. You could imagine what would happen for AMC if we firstly constantly see on a daily basis where there's a majority lit exchange. But more importantly, imagine if AMC was able to get an 80% lit exchange. If we're able to see this script flip, you're going to see how well AMC is able to grow and how much AMC is going to go up. And just like we talked about, there is enormous energy spent to suppress and dissuade from buying AMC. And that itself is the confirmation that we need to talk about how well AMC is. Just like we've seen in the past before, when Adam Aaron talked about Abe was going to prove that they were naked short on the AMC, the first day of trading illegal options were made available and both stocks were halted a massive amount of time. And this just goes on to talk about how the synthetics are there. The synthetics will continue to be there because the shorts are trapped, and we are going to be seeing them pay for it, just like we've seen the problems these funds are facing, and some we're going to talk about later on in this video as well. As far as the technicals, again, there are so many different types of technical analysis. And the biggest thing we talk about is how technical analysis, whilst it's very important, especially for those of you who make a living on trading, on AMC is obviously a lot different. But when we take a look at where we are right now, when we take a look at the decision point, firstly, we are seeing AMC still doing well technically as well. There is suppression, there is manipulation, but we're seeing how we're seeing these breakouts occurring, with these breakouts kind of building up, and we're seeing the room for AMC to go to 39. Not only that, some of the small short-term levels obviously taking a look at is 192, 210, and $3. And when we are able to break above this, the momentum will truly accelerate AMC. We still have to understand that we are still at accumulation phase, not only for us, but for the institutions as well. It's in the institution's best interest to buy as many AMC shares as cheaply as possible. And this is what we're looking at. So the fact that we're seeing at this current zone to be accumulation zone, it already is a good thing. It means that people is still viewing AMC at an extremely discounted value. But what we then can understand is that there's a big reason for why we're still at this level, not gone up higher. But the moment that AMC released the earnings, the moment that the catalyst change on AMC, you're going to be seeing that increase. And just like we talked about, if we're able to see AMC push above certain levels, we're really going to be looking at AMC to have that breakout. Another big thing in terms of macro fundamentals is the BOJ. Now, the Bank of Japan is something that's very important, especially with what we talked about with the yen carry trade. Now, especially right now, as the USD against yen is at such a high level where we're very likely to be seeing a massive government intervention, we are going to be looking at some volatility happening. Now, we've already seen what happens when kind of the whole Japanese yen carry trade even triggers a tiny bit. We've seen this plenty of times in the past before, and all those times there were massive volatility, there were massive drops in collateral. So now we're kind of looking at that same thing again. So if we're going to be expecting this, if we're going to be expecting government intervention, and we're going to be expecting volatility, you're going to be seeing how AMC is going to thrive in this. What we're also looking at for GME as well, it's just what we're doing in terms of the volume, in terms of still what we are expecting. In the same boat for GME and AMC, we really are looking at how illiquidity is becoming an issue, especially when you take a look at what's happening to the warrants as well. And the warrants have been a very good indicator for what to expect for GME. It's actually been quite accurate in the past before. Every time we've seen an increase in volume in warrant, we've seen the increase in GME shares because more and more people want to use the warrant to then buy up cheap shares of GME. And so that itself is already an interesting thing. Now, another big thing is that GME has actually approved increasing the number of authorized shares to 2.5 billion. Now, this is a major step forward for the eBay acquisition, which I think is going to be extremely beneficial. Now, earlier we talked about the illiquidity, kind of the hedge funds facing problems. And you can see here, Citadel says it lost 28 million as the victim of an alleged insider trading scheme. Now, this is something that needs to be talked about because it actually doesn't feel like that they're worried about insider trading, but rather that they don't have an edge on the market as well. And this is very important is because we've seen them losing money. We've seen their pods blowing up. We've seen them trying to actually take out more loans. And this is what we said with how they're going to be facing these problems and they won't be able to short AMC anymore. And you can see how quickly media react when it goes on to talk about these big hedge funds. but not the same when it comes to AMC. And then finally, when you take a look at the DTCC and we take a look at what's going on here, another case of how firms are lacking money. And it's what we've said, that we are really expecting that volatility to happen and that hedge funds are going to be liquidated. As always, this is financial advice, and I'll catch you guys next time.